Hey folks, Dan Frio here with your opening bell for September 9th, 2025. So mortgage rates, they're looking pretty good right now. Not too long ago, these things were 8%. So should we lock in? Should we float? That's the number one question I'm getting each day. So here's what I want to go over today's topic. We have the tariffs coming in, and I've been preaching this over the last few days. If these tariffs are deemed illegal, I'm going to go over how that's going to affect the bond market. And it might not be very good. Next thing is we're going to have a new jobs report revision. Remember we had a revision about a month ago when they came in and said, where did 250,000 jobs go? We're going to have another revision. And per Barron's, it looks like the revision's jobs numbers Tuesday, it could be ugly. Could it help the markets? Well, Trump's fight to aim the housing market woes, could it backfire on us, and could rates go back up to 8%? Well, folks, that's what we're going to talk about in today's video. So without further ado, let's get to it. So my name is Dan Frio. I'm actually a federally licensed mortgage loan officer. So if you're out there trying to buy or refinance, I'd love to help you. My slogan here is one application, one credit pool. We're going to compare your loan to over 30 different lenders. Now I'm going to explain this to you at the end of this video. So if you want assistance from me, please check out the end of this video. You can figure out how to reach out to me and exactly what do I do. So let's get over to the news that we're seeing right now. So here's what we have. We have potential Trump tariffs maybe being deemed illegal. Well, I did a report last night and I said there's about $180 billion in tariff money that might need to be refunded. It's a lot more than that. If you go down through here, I think it's telling us it could be $750 billion to $1 trillion that would need to be refunded. Well, how would they do that? Well, we don't have the money because thus we have a $37 trillion deficit. So the only way to fund these things would be to give people credits down the road. I don't think a lot of countries are going to want that. They're going to want hard, cold cash. So we might have to issue a ton of bonds to fund this thing. And you guys know how bonds work, so I'll get to that in a minute. The other thing is right through here, we had a jobs report that came in, I want to say it's about a month ago, and the markets kind of hiccup at that time. They were like, we lost how many thousands of people? 250,000 people just vanished from payroll. Well, there's a revision coming out today, and based on the numbers, they're saying it could be pretty ugly or maybe even uglier than it was before. Now, the concern now is with all the fights that Trump's giving on Wall Street and everything else, is this actually helping or is it hurting? So let's kind of dive into the details of what's happening behind the scenes. But here's an article I want to show you. Could mortgage rates go back up to 8%? This was actually a caption in August of 2025. And I want to go down through here with you and just kind of break down some of the news based in this article. And the reason why is because I was featured in this article, folks. I'm going to show you one that I was featured in a couple months ago and then one I was featured in over the weekend. Yahoo Finance has been reaching out to me saying, Dan, what's going on with rates? What is your customers asking? What are they feeling? So basically, here's what we went through. Mortgage loan originator Dan Frio, yes, that is me. Clients still asking, when will rates go back to 3%? And this prompted actually a live event we did saying, is the rates going to go to 5%? Because they got to get to 5 before they go to 3. I don't think they're going to get to 5 anytime soon, and I really don't think we're going to see 3% in my lifetime. And you might ask why. Well, I want to go to the next article that I was in Yahoo Finance. Where did that go? So I can show you guys, I really don't want the rates to go down that far. Where did it go? Right through here. Maybe this is it. If you go down through here, and you go through here, this is another great article, and this is another article that I'm in Yahoo Finance. Dan Frio, mortgage advisor in St. Charles, Illinois, said he isn't eager to return to those times, even when it was busier than he is now. So I did admit, when the rates were at 2-3%, it was crazy. He fears that any return to ultra-low mortgage rates could unleash a new wave of demand and send prices skyrocketing again. I don't want home prices to fly up. Frio said, I don't want rates to go to 2% because it'll be a point where you won't be able to afford a house. Here's what my comment was. They asked me, what do you think on rates? And I'm like, I don't want rates at 2% because here's what happens. House prices are going to skyrocket again, and you will never, ever be able to buy a home. I don't want that. I don't FOMO home ownership, but I also don't want you to, get into a house you can't afford. Rates are too high. Prices might come down a little bit. So folks, I'm not FOMOing real estate. I'm just here to advise you and help you navigate this process. If you're looking to buy a house, I'd love to help. If you're looking to refinance. A lot of people don't know how to refinance. I'd love to help you with that as well. So we'll get to that in a second. But I just wanted to show you, in the last couple months, I was in Yahoo Finance 2 times. They're asking, what is going on with rates and the whys behind it? Exactly why you're watching here today. So let's get over to what my thoughts are. Here's what the market looks like today. But I do want to go to this report on CNBC. This is that jobs report that's coming up. This is as important as maybe the tariffs in this cycle of the business. So let's get over to CNBC. We'll see what they have to say about the revised or the jobs report that's coming up and how that might affect the markets.
The second year in a row, markets are going to pay attention to a report they used to ignore, the benchmark revision to the annual payroll numbers. Senior economics reporter Steve Leisman joins us to explain why this is a potentially big deal. Is it time for that again so soon? When was that? Was that the 900,000 from last year?
It was 800,000 reduced to 500,000. And Joe, what the reason is because the focus of the health, on the health of the labor market. We get another important data point today, one that Fed officials have said they're focused on. Used to pay little attention to it. It's the release of this preliminary benchmark revisions to payrolls, and it's expected to be another big one. The benchmark revision uses new and more accurate state data to adjust the annual payroll numbers, and this is from April 24 to March 2025. So the data's kind of old, but, the best we have. Estimates range from taking off 400,000 to 900,000 that would reduce monthly job growth from what was 147,000 a month to 60 to 113,000 a month. Revisions, of course, are often revised between now and February because this data is preliminary. We don't get the finals until February, and it's often revised to show fewer jobs lost than initially reported. It'll be watched for what it says about the real economy and real growth, but also a political dimension with President Trump having accused the Bureau of Labor Statistics of rigging the data to hurt him. His aides say mostly it's about the big revisions show a need for reform at the BLS. Well, here are the numbers. Two of the biggest revisions of the past 25 years have come in 2022 when 506,000 jobs were added, 24, nearly 600,000 jobs were subtracted. You can see the biggest one was at a time of transition, 2009. Overall revisions tend to amount to just 0.2% of total payrolls, or about 300,000 jobs plus or minus. But the big story is what the 5-month-old data will say about the economy now. Fed Governor Waller recently estimated revisions could subtract 720,000 jobs and said it supports the Fed rate cuts because it shows the job market is weaker than it appears. Unfortunately, we won't know until February which months get revised. So if the weaker numbers are old, in other words, the beginning of the period, or more recent, perhaps now there's so much concern with the accuracy of the jobs data, there will be more support for funding the collection of the data instead of nominal and real budget cuts that have plagued the statistical agencies for years. Joe, thank you for that opportunity to do a public service announcement.
Maybe we can use AI. I don't know.
So that's the report for today. So let's take that. If we have that data and it comes in this bad, that's going to say it on the side of the Federal Reserve maybe cutting 50 basis points. But now the dilemma we have is through here, the tariffs. If the tariffs need to be refunded, we're going to have to submit billions, how much? $1 trillion worth of bonds out there. So let's get over to the bond market so I can help you understand how this works. So we follow on a daily basis. If you're new to my channel, it's right through here. We follow the MBS market. This is a bond that trades on Wall Street. This actually mortgage bond is the yield on this bond is the biggest component of your mortgage rate. We don't follow the 10-year Treasury, but that's another bond. So how bonds really work is like this. This is the price of the bond. As the price of the bond goes up, which we're not seeing today, let's get over here. As the price of the bond goes up, and we're seeing a little bit of that, mortgage rates go down. There's an inverse relationship. So if the price of a bond goes up, the rates go down. If the price of the bond goes down, rates go up. So what would happen if we had to issue $1 trillion in bonds? Well, it would plummet the price. So again, when the prices go down, rates go up. How bad can it get? Well, I don't know. And folks, I'm not fear-mongering. It's right on the top of the news that we have right through here. So I just want you to be aware of this. Now, the jobs market, it's completely weak. So here's the rest of the week the data that we're going to get in. We're going to start getting the inflation numbers. And here's the contradiction here. If we have a huge jobs report that's really bad, but then you start seeing the inflation numbers on producer side and consumer side going up, what does the Fed do? So if these numbers are stagnant, here's what I'm expecting, and I'll do an AI research on all these and get back with you to tonight what I think the PPI is going to be. And then tomorrow's closing bell, I'll let you know what I think maybe Thursday morning's CPI numbers are going to be. But these are going to tell us where inflation's going. So if inflation kind of goes stagnant, which I don't know if that's going to happen, but if we start seeing the numbers, like last reading was 0.9 on the PPI month over month, they're expecting to go down to 0.3. Is that what happens on the PPI producer inflation? That's a great number. But if these numbers start getting a little inflated, this is going to determine what the Federal is going to do. Is it going to cut 50 or 25 basis points? So we're going to have to see, is inflation still creeping up or is it starting to come down? Here's what the Federal Reserve basically looks at. They control the federal funds rate right through here, and they look at these things. Okay, one of the biggest component is right through here, the unemployment rate. Now, if we add another 700, 800, 900,000 people to unemployment, what's the unemployment rate going to do? Most likely it'll go up. So we're going to see maybe the unemployment rate go up, and then the tariff situation is going to be a whole nother debacle. So what I'm trying to get at, folks, the uncertainty right now in rates is all over the map. So if you like these rates and you're looking to refinance, could they go lower? They could. Could they go higher? Yeah, they could. But here's what's normally happens with these. It's kind of like gas prices. You ever go past a gas station in the morning and it's $3, and then on your way home it's $3.25, and you're like, what the hell just happened? I should have filled up this morning. That's kind of what goes on with these. The other day we had, Yahoo Finance, when they did call me, they said, what's the biggest or the hardest part of your job? And I said, when rates move like 0.25% or 0.1% in a day, because you out there as the consumer, you want to take advantage of that. But the tough thing is it might just be a blip in the radar for a day. And if we already have you locked in, it's really tough to just move all of our clients all over the map. So that's what's really difficult. So I don't like major moves. The nice thing is when they just kind of move like this, we can kind of move with the markets, because when they jump dramatically, it's tough. Even think of yourself. If you're looking to refinance or buy a house, when the rate jumps up 0.25%, maybe $100 or so to your mortgage payment, that might put you in a range you can't afford it. Or if it's coming down, it might be, okay, that's a sweet spot to refinance. So these are all the dilemmas that you might have when you're looking to buy or refinance. I'd love to be able to help you navigate this environment. So here's who I am. I'm actually licensed in all 50 states as well as Puerto Rico, because I work at a bank that holds that kind of license. But the unique thing here is I have a slogan. It's one application, one credit pool. We're going to compare your loan to over 30 different lenders. How do we do that? Well, our bank actually had the ingenuity to do this, and a lot of us came from the broker side of the field. We're like, we would like a lot of options for our borrowers, because if you're calling in, I don't want to just say, well, my rate is this and this is that. I want to be able to give you all kind of options, and that's what they did for us. They brought in over 30 different banks that we can work with. We can use their programs and their rates, things like this. If you're looking to buy, you got to check out this program. Okay, this is a $7,000, up to $7,000 down payment assistance programs that you don't need to pay back. And why do you want one of these instead of the ones that you have to pay back? Well, let's say you bought a house for $300,000 and you got a $15,000 down payment assistance. So now you have you did 90, you took an FHA loan, so you put 3.5% down. But now you have a loan that's like $310,000 on a house that's $300,000 because of the down payment assistance loan. So you can't refinance because you'll owe too much or more than your house's value. If you have this kind of loan right through here, you don't owe it back. It's basically you walk out the closing and it's free money. No lien, no payments. So these are programs that we can offer you. If you're looking to refinance and you're like, Dan, I don't really know what rate I want to refinance. Do me a favor, go right here. Hit the refinance tab. Plug in all your information and put in a rate that you're wanting that's 1% below where you're at now. It might even be 2%. You might have an 8% rate and you're in an FHA loan, and now you can get, where's the FHA rates? 5.95. Okay, so these are the things that we're offering you on our website. So go to the refinance tab, click it, put in your information. What's going to happen is we don't sell the data. I monitor it daily. Yesterday, I reached out to 15 different people. Nobody called me back. Nobody emailed me back. I bet you I get a slew of people calling me back today. But folks, register your loan in the RateWatch tool. And when that rate hits exactly where you want it to be, I'm going to reach out to you. I'll call you, text you, email you. We'll go over the numbers. We'll go over the costs. We'll go over the payment and look over your break-even point. If it makes sense, let's do it. If it doesn't make sense, we'll keep you on the wait list to see if rates go down a little bit further. If you've already got quotes out there, here's what I want you to do. If you got, a lot of people have got 2, 3, 4 different quotes, here's what I want you to do. Take the best one you have, call that place and say, I need your best effort. Fees, everything. Then what I want you to do is upload it right through here. What I want to ask you is if I can beat them on rates and fees, rates and fees, I'm expecting you to win you as a customer. That's why you're taking the time to fill this out. So that's it for today's folks. I will be back at Stock Talk Tuesday later this afternoon. I haven't posted that yet. I will be posting that here in just a little bit. We will be live today at 2 o'clock Central Time. Stock Talk Tuesday with Dan Frio. But I will be back at the closing bell to let you know how the markets are ending. Let's go over to stock market, see how that's faring for the day. What do we got here? Is it a Cinderella story or not, folks? Hold on, it's taking a while. Oh, it's a kind of. So we got all the indices across the board. We got Dow Jones, the S&P, the NASDAQ all up. We got oil up at 63. You know how I feel about that. As long as it's under 65, I'll give it a thumbs up. Cryptocurrencies 112. We're back there, and I don't see the VIX. So the VIX tells us the anxiety level on Wall Street, and I'm thinking it's probably, is based on these numbers, it's probably pretty calm at this point. But all these things can turn in a heartbeat. The tariffs, the revised jobs report, and more. So pay attention to what's going on with rates, folks, because if you're out there looking to buy or refinance, it might be a choppy ride over the next couple weeks. Thanks for watching. Thanks for watching, and I'll see you back here at Stock Talk Tuesday at 2 o'clock Central. Later, folks. Bye-bye.